According to supply managers in the 9 Mid-America states, how is the economy performing?
Creighton surveys of manufacturing supply managers in the 9 Mid-American states. The survey for the month of September, the number was slowing down. It was 52.7, and that's still above growth neutral, but down from August 55.5, which is obviously stronger. This is the fifth decline in the last 6 months. So the manufacturing economy in the region is slowing down. And again, this is the fifth decline. It's the lowest number since June of 2020. So the readings are getting worse and worse. When the national number comes out later on this morning, I expect it to be down below growth neutral. Now it's about the same. That number is about the same as the U.S. number, but the U.S. number will come out later on this morning. I expect it to be below growth neutral for the month of September. We ask about the greatest challenges going forward and for the rest of 2022, and supply chain disruptions, far and above the greatest challenge. 43% said supply chain disruptions. We had 35.6% said labor shortages, 10.7% said higher input costs, and then 7.1% said global recession, and finally the lowest in the reading was higher interest rates at 3.6%. So there are threats to the economy as the supply managers see it in the 9 states. Here I bring up the chart that compares the Creighton Mid-American number in blue to the U.S. number there in red. And as you see, it's been sloping downward, reaching a high in the month of March of 2022 of 71.3, and it's moved lower since then, essentially.
What were the hiring trends?
Hiring for September was up ever so slightly, 51.9 for September, above growth neutral, from August 51.8. So we're still seeing hiring, but as the challenges, that's one of the biggest challenges, finding and hiring those workers. The regional employment, when you look at growth over the last since pre-COVID level, the region's down still 0.7%. And that's 96,000 workers. That's non-farm employment and seasonally adjusted. And now when you look at growth, though, over the last year, the region grew at about 2.3%. Now that compares to the U.S. number, which is better. The growth year over year for the U.S. Economy was about 4%. Now when we're looking, we ask about holiday activity by the supply managers, what are they looking at? And it was weak. And when you annualize it, about less than 0.5% growth, and that's annualized over the rest of the year, and that's for the holiday season coming up. So very weak holiday season expected. And what's bringing that down is a lot of pre-buying. In other words, a lot of companies out there, retailers, other companies have built up their inventories in anticipation of supply chain disruptions. So that's what's going to slow things down for the rest of the year.
What inflation trends are you noticing?
The September gauge, that September inflation gauge, this is our wholesale price index. For September was 71.2. and that's down from 76.0. So the inflation gauge is moving lower, so we're seeing less and less inflationary pressures. I expect inflation will soften in the next few months to 6% year over year, and that's through quarter 4 of 2022. Short-term rates, as a result, I expect short-term rates to rise by another 0.5% by year's end. And so that's a little below expectations. I think the Fed's going to pull back somewhat in their November meeting. Again, I expect a 0.5% increase because of inflationary pressures, which are weakening or diminishing. And watch what's going on with the monthly, the billion-dollar tapering, $95 billion tapering. Listen to the governors and what they tell us about that. The outlook for tapering or reducing that long-term debt, what's sometimes called the balance sheet of the Federal Reserve.
What is the economic outlook?
We're still seeing essentially a recession, or let's call it stagflation. Very low growth and inflationary pressures way above the Fed's target of 2%. So I'll call it stagflation, and that's of course not good. Manufacturing is stronger than the rest of the economy. Housing is where there's a real problem right now. That's residential housing. Multifamily doing okay, industrial okay. So that's where we're seeing some real problems. Inflation will remain above 5.5% by the year's end or the next few months, I think, and that's coming down fairly significantly. Growth will slow again for manufacturing. Supply chain disruptions will ease a bit, and simply because a lot of companies have stocked up on inventories, so there won't be as many rushing to buy in the last quarter of the year. Short-term interest rates, as I said, will rise by another 0.5% for the rest of 2022. And of course, that's again, the Fed's been very aggressive. They will continue to raise rates, but they'll soften it. That's down from their increase. The last increase was 0.75%. This will be 0.5% in my judgment. Prime interest rate will rise from 6.25 to 6.75 by the end of quarter four. So we're going to see prime interest rates. So look out for higher interest rates. If you need to borrow today. Interest rates are not going to get lower, either long-term or short-term. Long-term interest rates are going to rise. We're seeing mortgage rates now tip above 7% for the first time in 15 years. So we're seeing some of the worst, if you want to look at it that way, the worst mortgage rates in, again, 15 years. Mortgage rates will continue to rise. I think they'll soften somewhat. The increase will soften in the first quarter of 2023. Keep an eye on the bond market going forward. Especially on the 10-year Treasury. That's the big gauge for what's going on. That mortgage rates are tied to that 10-year Treasury as the yield moves higher, and it's now about 3.7%, up about 0.6% over the last month. That's an indication of inflation feeding through. If it should move lower, that is a signal of something's really going on, like an invasion of Taiwan by the Chinese. That would move that yield lower. But otherwise, I expect the yield to continue to move in this range, maybe as high as 4%. National ISM reading, which comes out later on this morning, I expect it to be below growth neutral for the first time in a few years since 2020. Price of a barrel of oil, keep an eye on that. That's been moving lower. We're probably going to see it move a bit higher, and so gasoline prices are probably going to move a bit higher as the federal government gets out of the oil selling business. And listen carefully to what the governors of the FOMC, Federal Open Market Committee, that's the Federal Reserve's Interest Rates Committee. Listen to what they're telling you and me and everyone else across the globe what they're going to be doing. And they try to be no surprises here. They want to not surprise the market. And I think they're going to soften their stance on inflation. One more rate hike in November, about 0.5%. So that's our results for the month of September. And again, it's a slowing economy. I'll call it stagflation. I'll say that I expect it to weaken even further in the weeks and months ahead until we meet again on the first business day of November. May your economic cup runneth over. This is Ernie Goss from Creighton University. Thank you for viewing in.